good day. And today in this video we have with us Mr. Anand Dama, Head BFSI, and we will be talking about the banking sector, the budget and its implications on the banking sector. The first question would be, how would you sum up 2022 for the banking sector and the year gone by, and how 2023 would shape up, and what are your expectations of 2023?
Thank you, Heath, for the opportunity. If I have to sum up the CY22, then the CY22 was one of a phenomenal year for the banking sector, because we have come from the back of very bad phase which started somewhere in 2014 post the RBI's EQR exercise, which led to the asset quality issues, and then we were struck with demonetization, then we had the COVID. Therefrom the banking sector has recovered very well. On the balance sheet front, if you look at a lot of these banks are pretty stronger as compared to what were there in the past, and this has led to the revival of the credit cycle that we had seen. We started last year from about 5% odd growth to about 9 odd % growth, and therefrom we are now somewhere close to about 15 to 16% kind of a growth. So this growth momentum pickup which happened last year, that has led to a strong rally in the banking sector, and notably the public sector banks which have been a laggard for a very long time that we have seen. If I have to talk about the recent period and the 2023, we believe the credit momentum will continue going forward as well. The margin uptick that we have been seeing for past 2 quarters, that also should continue for at least 1 more quarter, given the asset pricing benefit that the banks are reaping at this point of time. And I think the new catalyst that we see for the banking sector in the CY23 is going to be the asset quality resolution, which has been held up for a very long time as such, and there we believe again the banking sector will do far better in the CY 2023.
Nice to hear that. We've talked about the opportunities and the positives about the sector in next year, but what could be the possible challenges that the sector could see in the next year?
Sure. So I think the most important challenge that we see is that the sector will have to perform even better as compared to the last year, because the investor expectations certainly have gone up. Right. Now from the fundamental perspective, if you look at the biggest challenge that we see is the deposit mobilization, and about in 2019 we had written a report that basically in case of banking sector, the liability mobilization is going to be the biggest challenge that we're going to see in the next decade, with a lot of banks on the ground, and there is going to be a huge cutthroat competition that we're going to see. Now with the liquidity tightening, which we believe will further continue to tighten with the advance tax payments somewhere in March, and the credit growth momentum seems to be strong. So this is one of the biggest challenge that we see. Add to that, we also have the HDFC Bank and HDFC Limited merger happening this year. Right. Now that would mean a lot of the borrowings which were sitting onto the HDFC Limited books will have to be converted into the deposits. So which to some extent is going to crowd out the deposit market altogether. And in the current scenario, we believe this is going to be the major challenge as such for the banks. How do they mobilize the deposits, and how do they fund the incremental credit growth which is going to come, and still sustain margins at the current levels?
Right. And now with the union budget coming up, what do you think the banks would be expecting from the budget, and what do you think can boost the profitability or the sector as a whole for the banking sector? What is your take on the budget?
Sure. So if you look at last year, the last budget talked a lot about the digital initiatives for the sector as a whole and for the economy as a whole, which benefited the banks. That is what we are seeing at this point of time. The second major announcement which happened last year was about the bad bank concept. Now unfortunately the bad bank concept, it's been almost long time, hopefully will fructify this quarter as such. We believe that the outlay for the bad bank certainly has to go up. That is number one expectation that we have from this budget. Secondly, as we said, that the credit momentum has picked up, but that's mainly coming in from the retail side. Now the credit momentum, if it has to continue, it will need a new leg altogether. There are early signs of corporate capex cycle picking up, the corporate working capital cycle picking up as such. But if that needs to be pushed ahead, then we will also need large infra projects, power projects, where already there is a deficiency that we see at the system level at this point of time. The PLI scheme need to be boosted up as such. and new avenues of growth need to be found. So I think corporate cycle revival, I think that is the biggest theme that we would look at, and what kind of announcement that actually that comes from the government side, that is what need to be seen, because the government will have to spend, and also later on we believe that the private capex will pick up. One theme that we are seeing at this point of time which is playing out is the change of hands on the corporate side from the which is happening at this point of time. I think that would go on for at least about 6 to 9 months, and thereafter the new capacity build up will certainly start. The EV cycle is also where basically banks are very positive. Defense sector is one sector where we believe is going to be a sunrise sector for the banking sector, and that be the case, we expect a lot of announcements around that coming up, and that certainly will be positive for the banking sector.
Right. Even on the payment side, like we are seeing many digital initiatives being taken. So there are announcements around UPI as well. So even there we can expect some announcements in the budget.
So UPI is a different ball game altogether. We have seen the explosion that has happened into the UPI payments, particularly after the COVID, and I think government has been doing its bit in terms of providing a lot of incentives on that side. One expectation that we have from I wouldn't say budget exactly, but yeah, somewhere around that time is that the UPI linkage to the credit card, particularly the Visa and the MasterCard, that is a big announcement that we're expecting anytime to come. And there obviously the MDR has to be lower than the typical 2% MDR that credit card companies charge. If government is able to incentivize through the budget in case of this lower MDR, then I think that is going to be a big boost even to the credit card business as such, which has been facing competition from the UPI as such. So that is one big announcement that we are expecting. On the CBDC side, there was an announcement last year. Thereafter, government and basically RBI has been working hand in hand, and there are already a lot of pilot projects which have happened on the retail side and now happening on the corporate side as well. So I think CBDC is the another important project that is there on the government's hand, which should basically push the overall digital initiative from the for the banking sector as a whole.
Right. So finally, I would like to ask you, like, what are the top picks that one should look at for 2023? What are the stocks that one should look at?
As I said that banking sector last year did well. We expect that to continue even in this year. We believe the levers will change for the banking sector. Last year it started with credit momentum, then it was margins. We believe it's going to be just one more quarter of margin story, and thereafter the new catalyst again is going to be the asset quality. So when we say the new story is all going to be about the asset quality, again here we believe the key beneficiaries will be the banks who have seen asset quality issues in the past, particularly from the corporate side. That be the case, we believe the larger private banks like ICICI Bank, Axis Bank, IndusInd Bank, and in the mid-size, the banks like Federal Bank, RBL again, which will see a lot of resolutions lining up next quarter. In the smaller banks, we like Karur Vysya Bank, which will certainly do well. Apart from that, the PSU story, which started last year, we believe that should continue even in this year, and they will be one of the key beneficiary of the asset quality resolutions that we are going to see. And there are topics are Bank of Baroda, SBI, and Indian Bank.
Right. Thank you so much, sir, for your time, and it has been great talking to you.
My pleasure. Thanks a lot.
Thank you.